Welcome back to Investing Outside the Box, the show where we rethink wealth, challenge outdated assumptions, and help high net worth investors build lives that are more stable, more tax efficient, and far less volatile. If you've ever felt like you're doing everything right, earning well, saving well, investing responsibly, but still watching too much disappear to taxes or too much fluctuate with the markets, you're in the right place. Today isn't just about information, it's about clarity. And that clarity can completely rewire the way your wealth behaves. I want to start with something most successful people never say out loud. There's a weight that comes with wealth. You work hard, you take risks, you build something meaningful, and yet your financial life still feels unsettled, like you're vulnerable to forces you can't control. Taxes feel like a penalty for success. Volatility feels like a threat to everything you've built. Concentration risk feels like walking across a tightrope. And liquidity decisions, they feel like landmines, where the wrong move can trigger taxes you never intended to owe. Most investors think this weight is normal. It's not. It's the result of a portfolio built for the masses, not for you. High net worth investors live in a different world. You have more exposure, more pressure, more complexity. And yet, the traditional portfolio you're handed looks identical to what's given to someone with a fraction of your income and a fraction of your responsibility. That's not just inefficient, it's dangerous. So the question becomes, what happens if you stay in a traditional portfolio? Here's the truth most advisors never say. Traditional portfolios work well only when your life is simple. But when you're earning 7 figures, when you own a business, when you're heavily invested in real estate, when you carry concentrated stock positions, when taxes are taking 40 to 50 cents of every dollar, traditional investing becomes an expensive guessing game. Markets drop. Your portfolio drops. Interest rates spike. Your bonds suffer. Your industry slows, your income, your equity, and your investments all fall together. You aren't diversified, you're duplicated. This is why so many high net worth investors feel anxious during volatility. Their financial lives are too connected to the same risk source. Alternatives exist to break that connection. Let's talk about alternatives, not as financial tools, but as solutions to emotional and structural problems. Imagine part of your portfolio that does not react to headlines. Imagine income that arrives predictably. Imagine strategies that reduce your taxable income instead of increasing it. Imagine a portfolio that's designed specifically for the complexity of your financial life. That's what alternatives do. Take litigation finance. These returns don't care what the S&P did today. Their outcome depends on legal processes, not market sentiment, or life settlements, built on actuarial science, not speculation. These assets have historically smoothed out the roller coaster effect that keeps many investors up at night. Private equity gives you access to growth long before the public markets ever see it, where innovation actually happens. Structured notes allow you to design your exposure. You choose the protection. You choose the upside. It's investing with intention, not hope. Infrastructure, especially data centers, has become the backbone of modern life. These aren't fads. They're essential systems the world relies on, whether markets are booming or struggling. And then there are strategies like Roth conversions and opportunity zones, where the value isn't just in the investment, but in the transformation of your long-term tax picture. And for certain high-income investors, specialized funds like motor fuel funds reduce taxable income today, not in the future. Not later, now. This ecosystem isn't random, it's strategic. And when done right, it completely reshapes the behavior of your wealth.
My wealth was mostly in tech, so earnings season always hit hard. We built a 30% alternative sleeve. When tech dropped, my life didn't.
A 70-30 portfolio, 70% traditional, 30% alternatives, isn't revolutionary, but the experience of that portfolio is. Volatility stops controlling your emotions. Taxes stop controlling your decisions. And your portfolio becomes something it's rarely been before. Quiet, steady, intentional. This is what it means to invest outside the box.
I did well in real estate, but taxes were always a drag. Then I found options I didn't know about. My taxable income dropped.
You deserve a portfolio that understands you, not a portfolio that treats you like everyone else. I focus exclusively on the alternative portion of a portfolio, the part that actually changes behavior, taxes, and long-term outcomes. And here's the truth. Alternatives aren't one size fits all. They're tailored deeply to your story, your income, your risks, your goals. If you're a high-income or high-net-worth investor, and today's conversation made you think, made you feel like you've been carrying more weight than you need to, let's talk. Not a sales call, a clarity call, a real conversation about what's possible. You've worked too hard to rely on guesswork. Let's design a smarter, more intentional future together. I'm David Harris, and I'll see you next week on Investing Outside the Box.